Hi, thanks so much for joining in. Happy Monday to you. My name is Alex Matthew. With me is Mahima Vachrajani, and this is Ask Profit. I know a lot of you woke up this morning getting ready to buy the dip, but Mahima, where's the dip?
Exactly. Like we were joking about yesterday also, we were talking to a lot of market analysts, and in fact they said that the markets are mature enough to take this, and we might not see a significant amount of downtick, but yes, there's no dip as such to buy the dip.
Absolutely.
For sure.
So let's talk about what's happening, right? So, and ultimately from India's perspective, the big focus has been crude oil prices, and Brent crude has remained pretty much where it was over the course of the weekend, or actually last week, and it's hovering around that $77 per barrel mark. And why this is that while there is a threat to close the Strait of Hormuz, which is, as you know, a major maritime route that allows the transfer of both crude oil as well as natural gas, that hasn't happened yet. And as a result of which crude oil prices are where they were. Of course, there is a risk premium, that is because of this increased geopolitical tension. The analysts are saying that as much as $10 is added to the cost of crude, but it's not very, very bad at this point. It's not, as some people were projecting, rising as much as $100 per barrel. And that's good news for India. So you have the benchmark that is trading with cuts of about 0.9%. And this, when compared with what happened on Friday, where the equity markets rallied in a broad-based rally, and you had the Nifty 50 that went above 25,000, well, this is par for the course. You expect that there would be some unwinding of what happened on Friday. But the broader markets are looking better. In fact, the mid-cap index is down just about 0.1% or 0.2% or so, and the small-cap index is trading in the green. I also want to take a look at the market breadth to see how it's changed over the course of the morning so far. I wouldn't be surprised if the gap is narrowed, and that indeed has taken place. So there you see, at the start of trade, you had a pretty wide gap between the advances and declines. The green there is the advances, and that has closed quite a bit. So you could see that panning out over the course of the session as well. I'll very quickly point out one sector that is in focus, or rather two. One is IT. IT is the big laggard in trade today, down about 1.6%, and that's because the Accenture numbers flattered to deceive, you can call it that. And so quite a few of the large cap names are losing ground. Infosys is one of them, which is the biggest loser on the Nifty 50 and down about 2.5% or so. But defense on the other end of the spectrum is doing particularly well for obvious reasons, because geopolitics is once again at the forefront and is gaining about 1.4%.
Right, and some other counters that are doing well, Z Limited especially, because the entertainment, because of the presentation where they've mentioned that Z5 will achieve break-even in FY26, and the stock is soaring on the back of that, up almost 9% as we speak. LT Foods under pressure because its US subsidiary received a countervailing duty of more than 340%. BL, HAL on the back of order wins, Zentech as well on the back of order wins. Of course, the geopolitical reason as well. There's Lloyd's Metal, which is also buzzing in trade on commissioning of two of its plants. There's Aventil again on the back of an order win. The stock is up. NLC India also on the back of an LOA is up and doing well in trade today. But these are some stock specific names of course. With that, let's also welcome in our guest for the day, Nilesh Jain, Centrum Broking, from Centrum Broking, and Saurabh Jain of SMC Global Securities joining us now. Before I take stock specific questions, Nilesh, your quick view on how you're expecting markets to pan out this week.
Very good morning to you. Good morning, everyone. So this week, since we have monthly FN expiry for the Nifty and Bank Nifty, we are expecting a bit of volatility. Today, we have seen a gap down opening, and markets are not able to hold on to its gain that we saw on Friday. And today is more sort of a consolidation we are witnessing. Good part is that Nifty is still trading well above its 21-day moving average, that is placed at 24,860. So that is likely to act immediate support from intraday point of view, followed by 24,500. That's the strike where we have seen huge amount of put writing. So from this week's point of view, I think the broader range for the Nifty could be 24,500 to 25,200, and narrow range could be somewhere around 24,700. Nifty should find some bit of support, and we may see rebound from here. And on the upside, a breakout about 25,000 will open further upside of 25,200 as well. So overall, we are expecting a bit of volatility where stocks and sector specific moves should continue. And the volatility index today spiked up close to 3%. It is currently at 14.11. So overall, it is very much in the comfort zone as of now. but any rise from here would be a cause of concern. So watch out for important levels as highlighted. We are expecting sectors and sectorial and stock specific move to continue.
All right. So, by the way, we started the show. I assume that a lot of you know this, but in case you don't, you can call us on the number that is on the bottom of your screen, or you can send us a message on the number that is on the top of your screen, as quite a few of you have already done. So, without further ado, let me go across to the first question. And Kailash Patil is writing in from Pune and asking about NMDC, which he's bought at levels of 40 rupees. He's considering adding more at the current price. Is this the ideal time to accumulate further? And is this a good idea to hold as a portfolio stock? He's identified that he wants to hold this for at least 10 years, which is quite a long period of time. Saurabh, very good morning to you. What would you say about NMDC?
Good morning, Alex. See, for the 10-year perspective, I think it is a kind of a value stock, and the valuation side it is quite comforting. Since he has got a very long horizon, I think it makes sense to add on the clients.
Could you tell me a little bit more about why you're saying this is a good value stock, earnings-wise as well?
Earning-wise, I mean, there is a bit of cyclicality in the metals. So, being a ore producer, we expect things to improve gradually going next year. And when things will improve, prices will also increase, and it will give margin expansion and higher profitability to the company. So, in that sense, I am saying it is a value stock.
So that's with regards to where NMDC stands. Our next question is from Pakshal Jain, who's writing in from Bellary. He's holding Manappuram Finance 160 shares bought at 177 a piece and wants to know if he can hold or book profits. He wants a view for the next 2 odd years. Saurabh, I'll come to you on this one. Manappuram Finance, what's the outlook like?
While the business outlook is good, there are quite a bit of guidelines which has come for the gold loan companies. But in my opinion, I think when you're betting on a gold loan company, I think Muthoot Finance is a better choice than Manappuram.
Okay. All right. So that's a pick in the gold financing space. We've got our first caller of the day. Pradeep is calling us from Bengaluru. Pradeep, very good morning to you. How can we help you today?
Good morning to everybody there. See, I am a long-term investor, small-time long-term investor with a vision of another 2 to 3 years. Now, I had bought Pidilite Industries about 3.5 years back at 2324 rupees. Now, this stock has not delivered significant returns in this period. So I just wanted to know whether I should hold on to it or whether I should book profits. And if I book profits, whether Shriram Finance is a good choice.
Okay. So, okay. All right. So, 2324 was your buy price. You've held it for a little while. I think it's been a decent run. Of course, Pidilite is a very large company and large stock. So, therefore, the gains that you've had over that period are nothing to sneeze at. But the question is valid. So, let me go across to Saurabh. Saurabh, gains to the extent of it's now 2941. So, he's made a pretty penny. Would you find a better outlet in the finance space? And a lot of people are pivoting in anticipation of an improvement in lending rates, etc.
Yeah, I mean, finance is anyway a good option. In fact, the choice he has made is also a good pick. But in my opinion, I think betting on a large cap bank like Axis or ICICI may also be a good choice.
So that's with regards to where these counters are concerned. Our next question is on Suman Capital. It's on Castrol India, and the person is a long-term investor. Ratish Menon is writing in, by the way, and he's a long-term investor, and he's holding 240 shares of Castrol India bought at 204 a piece. Wants to know if he can average or exit at the moment. I'll again stick with you for this one for a specific reason, because Castrol India is that counter that uses oil as derivatives, and if crude intends to spike up further on the back of the entire Iran-Israel conflict, what is the kind of outlook for the company that you're watching out for, because that's a key raw material for them?
If you look at the automobile space, there has not been much growth. It's been basically all the OEMs are reporting, very negative or maybe a smaller growth rates. In case of Castrol India, it is not that its raw material is directly linked to crude oil prices, but it is related to base oil prices. Normally, company tries to maintain their margin in adverse conditions also. Yes, it is a good stock to hold for the long term. But in short term, I think there would not be any price movement with respect to the broader markets.
Okay. All right. So some of you are asking, in fact, Lalita, who's just messaged, is asking, I'm not sure my messages are being noticed. They are being noticed. It's just that Mahima and I can't respond to all of them. And by the way, this is addressed to you, Mahima, but I will take it if that's not a problem. Redington is the name of the company that Lalita wants to know about. She's bought at levels of 45 rupees. She's asking whether it can be added at this price. Wow, 45 rupees, is that right? Can we pull up the very long-term charts and see when it hit that level? Okay, so I can't see 45 rupees on that chart as well. I'm wondering, yeah, at least 5 years. So she's been holding for a while. She's wondering whether it can be held for another 1 year. Can more be added? So Nilesh, I'll come to you on the charts. What are the prospects?
So Alex, this stock has given a good multi-bagger kind of return, and looking at the overall structure, still it has a potential to move towards 350 to 400 from a short to medium term perspective. Maybe next 1 year we may see the stock moving towards 350 to 400 zone. So overall, it's a buy and decline structure, but not advisable to buy at the high levels because the risk and reward is not favorable. It's better to wait for some bit of decline towards 260, 270. That can be a good entry point in terms of averaging as well. That can be done. For any long position, one should keep a trailing stop loss at 250. So that's a good support. If it breaks below 250, then chances are very high that we may see further selling pressure to continue. But as of now, it's good bet to be, stay put, and positionally 350 to 400 is the target.
Regards to where charts are concerned for Redington. Our next question, in fact, our next caller, Raghuveer, is calling in from Bengaluru. Raghuveer, a very good morning to you. कैसे मदद करें आपकी?
Good morning. मेरा पास 2400 शेयर है वकार फार्मा का, 280 रुपए में लिया हूँ।
ठीक है।
उसके पहले 750 से बेच चुका हूँ 1450 में।
ओके।
अभी एक साल रख सकता हूँ। अभी मैं ऊपर का टारगेट क्या रेट है?
ठीक है, मैं समझ गई आपका क्वेश्चन। सौरभ, आई टेक दिस अप विथ यू एंड इफ पॉसिबल आप हिंदी में आंसर कर सकते हैं तो वॉक हार्ड इज द काउंटर दैट ही इज होल्डिंग। 1 year इज दिस टाइम पीरियड, व्हाट डू यू थिंक ही शुड डू?
देखिए, कंपनी ने पिछले कुछ सालों में काफी टर्न अराउंड किया, इन्हें इसी बात का काफी फायदा भी मिला। फार्मास्यूटिकल में एक अच्छी जानी मानी कंपनी मुझे लगती है। कुछ शेयर ये पहले ही 1450 रुपए में, जैसे इन्होंने बताया, बुक कर चुके हैं। मैं समझता हूँ कि कुछ शेयर इन्हें यहाँ पर भी जरूर बुक कर सकते हैं, और क्योंकि इनका 1 साल का नजरिया है, इससे ज्यादा ये नहीं रखना चाहते, तो मैं समझता हूँ कुछ अनिश्चितताएं हैं अभी भी बाजारों में। यूएस की तरफ से कुछ भी ऐसा आ सकता है जो इंडियन फार्मास्यूटिकल कंपनी के लिए नेगेटिव हो सकता है। तो मेरी सलाह रहेगी यहाँ पर भी और थोड़ा प्रॉफिट बुक करें और बाकी को होल्ड करें।
इफ यू आर स्टिल देयर, मेरे को सिर्फ एक बात समझनी थी, क्योंकि आपने बहुत अट्रैक्टिव प्राइस पे बाय किया है और ऑलमोस्ट 34 लाख प्लस के प्रॉफिट पे हैं आप। क्या सोच के बाय किया था वॉकहार्ड?
हेलो नहीं, हमें पहले 3-4 साल को पहले बाय किया था। हाँ। हमने पहले 800 में किया, उसमें 600 में किया, उसमें 500 में किया, उसमें 200 में किया, उसके बाद लास्ट में 165 में 2000 बाय किया, तो टोटल 3000 बाय किया था मैं। अच्छा। उसके बाद 750 1450 में बेचा, परसों 200 शेयर भेजा हूँ, 1770 में भेजा हूँ। अच्छा, नहीं मैं पूछ रही हूँ कि जब आपने बाय किया तो क्या सोच के बाय किया? ये हमने पहले 10 साल के पहले एक बार किया, तो उसमें मेरे को प्रॉफिट आया था, ऐसे ही प्रॉफिट आया था। 200 में पैसा 800 में सेल किया था, वही 800 आया था। अच्छा। इसलिए हमें 800 में ऊपर के करके एवरेज करके ऐसा रखा हूँ। अभी मेरा टारगेट है 2000 आ सकता है या नहीं आता, वही पूछ रहा हूँ मैं। अच्छा, ठीक है, ओके। 2000 आ सकता है कि नहीं? तो सौरभ का ये कहना है कि थोड़ा सा प्रॉफिट बुकिंग कर लो और थोड़ा सा रखो। करने की शुरू किया हूँ। मैं पिछले बार में 1750 में 200 शेयर बेच चुका हूँ। अभी हमें आज भी डाला हूँ 1900 में डाला हूँ 500 शेयर। ठीक है, ओके, समझ गए रघुवीर। ठीक है, थैंक यू सो मच फॉर कॉलिंग एंड कांग्रेचुलेशंस ऑन द प्रॉफिट्स दैट यू आर मेकिंग। All right, our next question then is from Jai Krishnan, who's writing in from Kerala and wants to know if this is the right time to make an entry in Technoplast from a medium term time Technoplast from a medium term perspective. Saurabh, I'll come to you on this one. Is Time Technoplast the right counter to make an entry into right now?
It's a very good and old company. If you look at the operational front, the business is making good progress. The company is putting up, double-digit growth year on year. In my sense, I think it is a good stock to invest.
If I remember correctly, the Q4 numbers for Time Technoplast were particularly good, and as a result of which the stock did rise quite dramatically over the course of the last 1 month. There you see about 20% or so. All right, Dheeraj is our next caller, calling us from Hyderabad. Very good morning, Dheeraj. How can we help you today?
Sir, good morning. Actually, thanks for the show. I should be very grateful to all of you guys, everyone.
It's our pleasure.
So, sir, my query is regarding Adani Green, sir.
Okay.
Sir, I have purchased 650 shares of Adani Green at 947 rupees. Sir, actually I have booked losses in Geofinance and Premier Energies of rupees 20,000.
Right.
And I have purchased these shares.
Yeah.
Because recently the stock reached a level of around 1080. In January, it reached, if you see the 1 year chart, the all-time high is around 2080 rupees.
Yes.
So, recently in January, it reached the level of 1080.
Yes.
So, I have seen strong support at 900 and 920 rupees. And Adani Green is a huge stock as in the renewable space and power space.
Yeah.
The entire power space is underperforming as of now.
Yeah.
And the entire renewable space is underperforming.
Yeah.
So if the index reaches the next level or the next league, I would like to hold it for the next 1 year actually.
Okay. So you're looking at what levels you can get. I got your question, Dheeraj, and very well analyzed. But let me get you a view on the technicals, if that is okay. Nilesh, I'm coming to you on this. 947 is the price that he's bought at, and he's looking at a 1 year potential. Of course, it's pretty far away from all-time highs. What is the upside potential that you see?
Well, Lex, this particular stock has been one of the underperformer, and recently, as he rightly pointed out, that the stock has taken a good support at 920, 930 zone. So that is still acting as a very strong support zone. With a stop loss below the same, long position can be held, and we can expect a gradual recovery towards 1050 to 1100 from a short-term perspective. And from a position perspective, a breakout is awaited. It should break the level of 1080. If that happens, then we can expect a strong movement today towards the levels of 1200 to 1300 as well. But do not expect this stock to correlate with the market, because the stock has been one of the underperformer within this space as well. So keeping a stop loss near 920, the long position can be held, and we can expect a gradual recovery. But I'm not expecting any V-shaped kind of recovery in this particular stock.
Keep an eye on the fundamentals as well. There's a lot, Dheeraj, as you know, as you probably read, that is happening with renewable energy and what Adani Green specifically is doing. So I'd encourage you to have a look at that. But the standard disclaimer here, Adani Green is part of the Adani Group, and so is NDTV Group, of which NDTV Profit is a part. The next question is from Anurag, who's writing in from New Delhi and asking about Amara Raja Energy and Mobility. He's bought 28 shares at an average price of 1,168 rupees per share, and he's losing a little bit of ground. He's got a perspective for the next 1.5 to 2 years, and he's wondering what he should do with this. Saurabh, on the fundamentals, is this the best play in your opinion in this space?
Well, it is a very good and old company in the battery space. They are doing a lot of research activity also on the lithium side. Also, they have a small business in the. They have small exposure to towards mobile oil business also. But I don't know why this stock is consistently underperforming. If you look at the valuations, it is on the lower side. I think it is better. I think you should wait for this quarter, get the sense how this quarter pans out and what the management give guidance for the ensuing quarters, then take a call.
All right, so that's the view. Hold is the view on Amara Raja batteries. Our next caller, Vinod, is calling in from Karnataka. Vinod, a very good morning to you. How can we help you today?
I have brought the Varun Beverages shares of 512 rupees at 120 number of shares, ma'am.
Okay.
The share which is in negative trends still from past 6 months. I don't know what is the reason for the negative sentiment of the share, despite of doing good revenue and good profit from the last quarters and past year.
Right. And you want to continue to hold this from a longer term perspective, right, Vinod?
Yes, ma'am.
Okay, I'll take this up with Saurabh then. Saurabh, what he's talking about is that since the past 6 months, the stock has not done well. And this is because the stock had seen a significant run-up before that. Plus, valuations have never gotten cheaper for something like a Varun Beverages, right? What's your sense like? Should he continue to hold this counter from a longer-term perspective?
You're absolutely right. The stock has seen phenomenal rise and the valuations were always expensive. I think it is normally these 6 months are good period for this company. And after the so much expansion plans, I expect the numbers to be good for the June quarter and in fact also for the September quarter. My sense is it is better to hold.
Better to hold. Okay, Varun Beverages. Hope that answers your question, Vinod. The next question is from Sudhir Agarwal, who is asking about ACC. He's got 1,000 shares, which he's bought at levels of 1,890 and losing ground. He's wondering whether he can hold for the next 6 months to 1 year and what the potential upside is from this point. Nilesh, on the charts, what's the view?
See, on the chart, the stock has been in a downtrend. If you see from past almost 1 year, the stock has constantly formed a lower top and lower term formation. But good part is that after this correction, the stock is inching towards his multi-month support zone. And that support zone is placed somewhere around 1770 to 1800. So keeping a stop loss below 1770, one can stay put hoping for a pullback because the stock is still in a downtrend. Only pullback can be seen if at all it moves near about 1900 to 2000. That can be a good exit opportunity because the stock is not moving in an upward trajectory as of now. So looking more sort of a sideways to negative, you have better options within this space. Ambuja Cement and also counters like Ultratech Cement could be a better option. But ACC purely from a short to medium term perspective looks slightly on a weaker side.
All right, so that's a view on ACC. Govind has got the next question. Govind, very good morning. How can we help you today?
Good morning, Alex sir, and all of you. Good morning, sir.
Good morning.
Taking my query is a very honor, sir. Actually, Alex sir, I have one doubt, sir.
Yes, please.
Force motors, can I observe for last 3 months? The stock is tremendous rally, sir. Is it right time to enter for long-term investment, sir? At least I can invest at least 10 lakhs, sir. Actually,
wow.
For
Okay.
a bulk amount, actually.
Okay, so I'm glad
What
that
is the fundamentals and what is the technical?
Yeah.
Where can I enter?
Yeah, and that's an important question that you're asking, and I'm glad that you're asking before deploying a large quantity of money, because ultimately when you're buying such a large quantity, Govind, it's important that you get the right price for what you're paying. Let me go across to you, Saurabh. As he's pointed out, it's been a frenetic rally for Force Motors. I'm just wondering whether this is a catch-up rally, whether it is a little too hot, and whether you would deploy a considerable amount of money. Govind is thinking of 10 lakh rupees, or is there a better alternative? I know that people have spoken about the likes of Mahindra and Mahindra, people have spoken about the likes of even Tata Motors, because it's a contra bet at this point, considering that it's gone through a little bit of value degradation.
I would not like to recommend Tata Motors as you have said it is a contrarian call. But in case of Force Motors, yes, there has been a tremendous improvement in the operational performance of the company and the profitability itself. I think that is the primary reason that the market is quite convinced that going forward the profitability will be moving like this, the way the company has shown in the last quarter, and that is the reason the stock has got re-rated. My sense is if you want to be in the Force Motor, I think it is better to buy some, like maybe you can divide your investment into 4 or 5 parts and buy in a staggered manner. Maybe you can buy a part at this price, and after every 7-8% decline, maybe you can add more. And with respect to some other company in the automobile space, that yes, Mahindra looks good to me.
Yeah, because I want to establish this fact with you. I want to talk very briefly about the valuation metrics as they stand right now. As I see, the trailing 12 months price to earnings for Force Motors is at 35 times, whereas for Mahindra it's at 30 times. So given the kind of relative growth that you would see, and assuming that the tractor segment grows better than it has in the past, if the monsoons are normal, then wouldn't this be a better pick, Saurabh, in your opinion?
I think Force Motors, the business is only in a segment like auto, trucks and and the tractors. And in this segment, there is a possibility of higher growth than Mahindra will see.
Okay, fair enough. All right, so Govind, that's the point. Don't deploy whole hog into force motors. Look at the price and look at declines to accumulate. And of course, M&M is also an opportunity for you to consider. Diversify your holdings. That's the best approach to have. We have to slip into a very quick break. We've got more on the other side, so do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement.
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us. I mean, you've been doing that already, but that's just a reminder. All right, with that, let's move on with the next query. The next query is from Raja, who is writing in from Hyderabad. He's bought RVNL shares, 5,000 shares in fact, at 50 rupees a piece in November 2022, and wants to know if he can buy more, hold or sell, or even book profits. His time horizon is 4 to 5 years. I'll take this up with you, Saurabh. I mean, he's bought it at very attractive levels. The stock is currently trading at 390 rupees. What would you suggest? Can he continue to hold this for the next 4 to 5 odd years?
See, while he is bought in a very good price, I feel that booking profit will be a wise decision, because after the correction also the stock seems to be highly valued. It is trading at 9 times to book value. And in fact, if you look at the operational performance, the company is not keeping up the growth pace that it should have, considering the valuation it is trading at. So my sense is better to take some money off the table.
Money off the table. Let me very quickly go to Nilesh. Nilesh, on RVNL specifically on the charts, what's the best level to take money off the table?
See, ideally, one should wait for a pullback. Pullback towards 410, 420 could be a good, could give a good opportunity to exit, because 200-day moving average is placed somewhere around 420. So the chances are very high we may see a pullback, but better use this pullback to exit from this particular counter from a short-term perspective.
All right, Advait from Kerala has got the next question. Shalby Limited is the name of the counter. 198 is the buy price. Given the current market conditions and the company's recent performance, should I consider averaging down, holding my position, or exiting the stock is a question. Do you have enough data on this one to give a view, Nilesh, on the charts?
Yes, I do have the enough data to comment on this particular counter. This stock is in a downtrend. First of all, it is trading well below all long-term and short-term moving averages. We have constantly witnessed a formation of a lower top and lower bottom formation as well. So, looking at the overall texture of this particular stock, looks like it is moving towards 170 to 160 levels on the lower side going forward. So better to exit from this particular stock on pullback. If you see any pullback towards 185 to 190, that can be used as an exit opportunity, because we are not witnessing any sort of a reversal candle as of now. So structure wise looks slightly on a weaker side. Better shift to better options available. This stock looks weak from a short to medium term perspective.
What would those better options be, Nilesh?
See, better option could be, first of all, Bharat Electrical Limited. That's one particular counter we are tracking, and this particular stock has been in an uptrend, and we are expecting further up move to continue towards 440, 450 levels on the upside. So from a short to medium term perspective, can be bought keeping a stop loss below 395. Apart from that, another stock, that is Trend. So Trend is also looking positive. From the lower levels, we have witnessed a good rebound in this particular counter, and we are expecting this further momentum to continue this particular stock towards 6,200 to 6,500. So yes, this can be bought with a stop loss below 5,750, and buy and decline should be the strategy here.
Okay, if you could only see Nilesh, if you could only see Mahima's eyes sparkling when you were speaking about Trent, because obviously it's a stock that she tracks very closely, and so therefore the potential upside from here that you were talking about caught her attention. All right, but on that note, thank you so much for joining us this morning, Nilesh. Always a pleasure having you on the program.
Thank you, Alex.
Okay, we will soon be joined by Ajit Mishra of Religare Broking. Ajit, very good morning to you, and thanks so much for joining us this morning. Okay, so this one's an interesting question, and I think it's a good opportunity for me to come to you on this, and I'm going to read it as is, because ultimately these are the questions that our viewers have, and the regular investor would have similar thoughts. And I'm congratulating Rajesh for putting this down, because I think it's important to address. He says it's a generic query. Why is the Nifty overreacting for every news, even though India does not have much impact? The Nifty fell almost 1% today, whereas Israel's stock market is at the year high, or at an all-time high. The petroleum minister has clearly said that we have diversified our crude imports and we have stocked up for several weeks. I don't understand. Now, this is a fair question to ask, but I do want to point out to you, Rajesh, that a move of about 0.8% on the downside for the Nifty 50 is really not too much to write home about. If anything, it's a very measured response to the global uncertainty that we're seeing. So let me go across to you, Ajit, on the charts. What can you tell us about the move today? Of course, to a certain extent, one would argue that the drop that we're seeing is on account of IT, which is underperforming today, and it's moving for completely different reasons.
Yeah, good morning, Alex. So that's true, because if you see, Alex, the top underperformer in today's session, largely they are IT majors and some of the profit taking in the heavyweights, which were under limelight in the last trading session. But Alex, one important thing that I would like to highlight is that this is something not new that we are observing from last 5 weeks. Means every week, especially in the last 3 weeks, we are seeing Friday being a decisive directional move that we see in the index, and in the next following week we said see that move fizzle out, be it on the positive side or negative side, and this is what we are observing consistently. So at the same time, what you rightly mentioned is that today is largely due to IT, and we are still holding up the short-term average. So broadly, if you see, the texture has not changed even after this decline, and the closing is going to be important. So let's say if we manage to close around 25,000 mark, I would rather see this as a very positive close for the market, and probably this week we can see a breakout also about 25,200, which could help the index to inch toward further highs. So texture looks positive. One should not get carried away with the what we are seeing, a global noise and everything. 24,700 when it comes to the Nifty should be your key support.
Of course, keeping in mind the expiries as well. All right, then our next caller, Rahul, is calling in from Jaipur. Rahul, a very good morning to you. How can we help you today? Hi Rahul, can you hear me? Okay, I think we seem to have lost him, but we do have his question. He's holding 1900 odd shares of Kirloskar Oil, bought at 847 a piece. And I believe I'll take this up with you, Saurabh. What's the view like? We did talk about Castrol India, but I think in the similar fashion, if even Kirloskar Oil might get impacted if crude spikes, what's the outlook like?
In my opinion, I think the company is into the industrial equipment making, and it is a very old company. So the stock has seen a stupendous rise last year, and the valuations have got corrected now. On the operational front, the company is growing at a double digit. In my opinion, I think for the long term, it is a hold.
Okay, it's a hold. All right, we've got a next question on IRFC, and this is from Vijay. I'm not sure where he's tuning in from, but he's bought at levels of 182, and he's got significant quantity, 2,000 shares that he's bought. The stock is currently trading below his buy price at 135, and he's losing about a lakh of rupees. And so he's wondering what to do on the charts. He's got a near-term view. Ajit, on the charts, what's the view on IRFC?
So Alex, he bought at very high levels, maybe close to around August last year, is something that he made those purchases. And though we were seeing some bit of a buying interest emerging in the railway counters, the lower level last couple of weeks, IRFC is not participating in similar quantum. So it's going to be a very gradual journey for IRFC. And the first hurdle exists around 150-55 marks. So in case if his view is very short term, I would recommend him to maintain a strict stop at 125, because below that, again, the bias would turn from recovery to negative. And upside around 155, 160, he should review his position.
Okay. All right. So that's the view on IRFC. Unfortunately, buying at high levels, you'll have to widen your time horizon or book losses. Those are the two options that you have available for you. We've got our next caller. Venkat is calling us from Bengaluru. Very good morning, Venkat. How can we help you today?
Good morning, sir, and thank you all who are in the panel for your clarifications. So I have a question on IdeaForge.
Okay.
I am holding 91 shares at 479.
All right.
Looking at the recent move upwards, so I just want to add some more quantities.
Mm-hmm.
And looking at the revenues, I see at the moment for the defense, it is around 5 to 6% only it is contributing. All of a sudden, it came to the picture and it rallied. So now I want to add it some more shares as it is fallen from around 1,200 to 1,300 rupees. So do we still have the margin of upwards? Can we average it here, or it is okay to hold at the moment whatever I have?
Okay. I just want one clarification, Venkat. How long do you intend to hold this for?
I bought it around 6 months before.
Okay.
So I'm thinking one more 6 months. So for the short term, 1 year I have taken it actually.
Understood. Okay. So Ajit, I'll come back to you on the charts. This is a stock, as he pointed out, that has gained quite considerably. In fact, in trade today as well, it is up 10%. And so therefore the question is, and I think other panelists, other experts have pointed out that it's better to average on the upside as opposed to on the downside. I don't know what your opinion on this is. Is this that moment for him to deploy?
So Alex, it's always recommended that you average your profits, or means you rather build on your existing profitable position instead of loss making. So that's always a good strategy, especially if it's a trading position. But since his view is 1 year, 6 months, he bought it at very decent levels. Now the stock have moved up very sharply. We are very close to the resistance. So I would not recommend him to add at current levels. So because 690, 700, means 10% is the upside. Downside, again, we have the risk that in case if market corrects and the stock also witnesses some profit taking, because the move was almost vertical from 350 to 630, in last 5-6 weeks. So probably in case if he gets any dip around 600, 550 zone again, that's a good buy, or a breakout above 700. In that case, we can see next leg of the momentum, which could help the stock to inch toward 900 plus level.
Okay, so that's a comprehensive view on IdeaForge. The stock is buzzing, as is the rest of the defense pack. By the way, it's the one sector or index that is doing particularly well in trade today. and it's up. Zentech is up 5%. The index as a whole up about 1.5%. But I do want to tell you about the next show, guys, because this is Know Your Company. I'm sure that a lot of you have already seen it, and I want to tell you what's up next. By the way, in case you haven't seen the show dives very deep into the fundamentals of one company every day, and these are stocks that you potentially hold in your portfolio, so it would bode well for you if you listen in to these conversations. Mahima is going to be on this show today. It's on V2 Retail, and this is a popular stock. A lot of you have either looked at it or invest in it. Why are they talking about it? The questions that they're asking is the growth that the company is seeing sustainable? Is the pricing that they have sustainable? How quickly can the inventory days come down? Working capital days and cash flow, can they sustain at this point? And the margin outlook as well as the return on equity sustainability. Of course, Mahima is going to talk about all of those aspects. She tracks the company very closely, but they're also going to be talking to Akash Agarwal, who is a whole-time director of V2 Retail. I'd encourage you to take a look at that entire conversation. It starts at 11:30. All right, the next question that we're taking is on Orient Green, and this is now Shonilal, who's writing in from Kerala. He's bought a very significant quantity at a price of 20 rupees per share, and this is why you need to be very wary of the stocks that you invest in. Right now he's holding 5,000 shares at a price of 13.29. So the question is for you, Ajit. I'm not sure if there is a fundamental view on this. Saurabh, I'm just checking with you. Do you have a fundamental view, Orient Green?
No.
Okay, so I guessed as much, which is why, Ajit, what is the strategy now? Should he book losses?
So Alex, is a very volatile stock. Means since listing, I've been seeing the stock, oscillating sharply, in a very volatile range. And currently, also after the failed attempt of securing its long-term averages, the stock is drifting lower with hardly any volume. So that clearly shows an underperformance. So it's good idea. Definitely, you should book losses and avoid such stocks in future.
All right, avoid such stocks in future is the view coming in on Orient Green from Ajit Mishra. All right, our next caller, Shankar, is calling in from Kolkata. Shankar, a very good morning to you. How can we help you today?
Very good morning, ma'am. See, I'm having 50 shares of EID Parry.
Okay.
But still at 487 rupees.
Okay.
Now, the stock has appreciated a lot.
Right.
I would just like to know whether at this point I should hold on to it or whether I should book profit.
Okay, got your question, Shankar. I'll take this up with Saurabh. Saurabh, he bought at attractive levels, and plus the entire theme of ethanol going around, government raising its targets as well. Do you think he should continue to hold EID Parry or sell and book profits? He's sitting on profits of around 24,000 odd rupees.
I think lot of cyclicality is there in the business with respect to the sugar price and ethanol pricing. My sense is because of this huge volatility, I would recommend to book partial profits and hold the remaining.
Book partial profits is the view on EID Parry. Okay, where would you deploy the partial profits though at this point, Saurabh?
I think it is better to park money in the maybe utilities or banking.
Okay.
In the utility space, we like NDTV, and in the banking space, I would stick with the larger ones like ICICI or Axis.
Got it. Okay. So this is actually a follow-up. Vijay is writing in from the United Kingdom, and he's woken up bright and early to tune into this show. He has bought based on another panelist's recommendation, KFin Tech. Or rather, he sold KFin Tech 50 shares and he's holding 50 more. He's asking whether it has reached its short-term potential and should he sell, or is there more upside available in the short term? The stock is up 4% or thereabouts in trade today as well. So Ajit, the question is for you on the charts, should he book out right now?
So Alex, in my opinion, he should definitely hold because the texture looks positive. Means after this sharp decline from 1600 to 700, in the last 4-5 months, the stock has formed a strong base while holding above its major averages. And off late, in fact, it has completed a fresh buying pivot. In fact, he can add more if he's planning to hold this stock at least for a month or two, with the stop loss at 1200 and potential target of 1550, 1600.
To hold or even add more at the levels that Ajit mentioned. All right. Now, next caller, Murli is calling in from Bengaluru. Murli, a very good morning to you. How can we help you today?
Good morning to you and all the panelists and anchors. I bought Atul Limited.
Okay.
100 shares at 6,884.
Okay.
And I had a long-term view. And the company has completed its capex of 2,000 crores recently.
Right.
And the chemical industry, probably after 2-3 years of languishing, is on the green shoots are being seen, I'm told.
Right.
So it is yet to reach its best performance of 2022 or 21 financial year, probably in the next 2 years.
Right.
What is your view from long-term point of view? Can I add more?
Okay, Murli, got your question, and as always, you've done your research very well. I'll take this up with Saurabh. Saurabh, Atul Limited, what's the outlook like? Can he add more? He's already holding 100 odd shares at 6,884 a piece.
See, the tough period for the company seems to be over. If you look at the operational numbers on the March quarter number, there was an improvement on both on sequential and year-on-year basis. If you look at the valuations, it is trading at the lower end of the of its trading band. If you see the long-term period, it is trading around 3 times to book value. I find merit in holding the company, holding the stock, and I would suggest to add more.
Suggest to add more. Atul Limited, and by the way, Murli, kudos to you for the kind of research that you put into each stock that you're holding, and I've noticed that you invariably have gains in the stocks that you ask us about. All right, so let's move to the next one. We've got Shashikant, who's writing in from Pune, and he's looking for a short-term trade. He's got Yes Bank, 4,000 shares that he's bought at levels of 21 rupees per share. He's incurring a small loss, but he's not too far away from the current market price, which is 19.8 or close to 20 rupees per share. On the charts, let me go to you on this one, Ajit. What is the potential upside here?
So, Alex, in my opinion, though we may see some rebound due to the oversold position in Yes Bank, maybe close to around 20.50. But instead of waiting for this rebound, the ideal approach is to shift to the counters which are outperforming within the sector. So Kotak and Axis is something that if the view is short term, we can definitely switch even at current levels. And in case if you wish to continue with Yes Bank, then 19 should be his strict stop loss.
Which is not too far away. All right, so point well made. And I think this is a consensus view both on the technicals as well as on the fundamentals. Opt for the slightly larger, more established players in the banking and financial space. We've got our next caller, Arvind from Chennai. Arvind, very good morning to you. How can we help you today?
Hi, good morning to you all. I am looking to invest about 1,000 shares in either Vedant Fashions or on Route Mobile.
Okay.
And I am looking for a time period of around 6 months to a year.
Okay.
Would like to know which one would be a better bet.
Got it. All right, since you've established, is there any rationale that you have for selecting these two companies?
I've seen both these stocks correcting without any major negative reviews in terms of their overall financials or fundamentals, etc.
Right. Got it. I got your question. So, Ajit, let me come back to you on the charts. Vedant Fashion and Route Mobile are the two counters that he's identified. 1,000 shares of either. Which would be the better bet?
So, ironically, Alex, both stocks are looking almost identical on charts. Means a very sharp decline followed by a very tight range of consolidation. Both stocks are witnessing. And Manyavar, which is Vedant Fashion, is seeing bit of a traction of late with noticeable surge in the volume. So that indicates a possibility of consolidation or maybe the accumulation at the lower end. So among these two, Vedant Fashion means Manyavar can be considered. And since his view is 6 months, I would recommend him to maintain a stop also, considering that the overall trend is still negative. It's just that we are buying for a recovery. So 710 should be his closing stop loss, and upside around 1,000, 1,050 something that he can maintain as a target area.
Okay, our next question then is from Shweta Kohli, who is writing in from Gurugram. Her query is regarding GPT Healthcare. She got 2 lots in the IPO last year at 172 and added a few averaging out, but the share is not going anywhere is her problem. And she's saying that should she continue holding the shares that she's already holding, or should she sell at the moment and book losses? Saurabh, I'll come to you on this one. What's the view like?
won't be able to give you this.
All right. Then, any view on the entire healthcare space as a whole, and which pockets do you like in that in the entire space?
I think in the hospital space, we like Narayana Rudale and maybe Rainbow Childcare.
Any view, Ajit? I know that it's a relatively new listing on GPT. What would you do with it if you got allotment in the IPO? Would you exit at this point?
Yeah, certainly I would, Alex, because if you see that it's been a very volatile trend, since listing, and though we are very close to the lower band of this prevailing consolidation range, but at the same time, the stock has been maintaining lower highs during this consolidation phase. So I would rather suggest not to stick with stock where I have opportunity loss also, and the volume is also negligible. And in case if it witnesses any bounce also, we have multiple resistance to cross. So it's prudent that she should exit her position and switch to some counters which are trading in sync with the market trend.
All right. It is time now, gentlemen, to hit the rapid fire round, and you both know what this means. We'll throw as many questions at you over the course of the next 2 minutes. Do keep your answers as concise as possible. Raghunathan has got the first question. Jyoti Labs is the name of the counter, and he's looking for an entry point for the long term. Ajit, on the charts, is this a good time?
Yeah, buy with 275 as a stop loss.
Okay, Power Grid is the next counter. Ramesh Kumar from Coimbatore has 700 odd shares at 189 apiece. Wants a view. Saurabh, your view?
Switch to NTPC book profit.
Okay, PG Electroplast for a view of more than 1 year. Can it be bought at the current market price? Of course, he wants to consider either this or Varun Beverages. Saurabh, what's a view?
Varun Beverages.
All right. IDFC First Bank is the next counter. Sanjay is holding 300 odd shares at 76 a piece and wants to know if it can continue for the next 2 odd months or not. Ajit, your view?
Hold 67 stop loss, 76 first target.
Okay, Paridhi Taneja wants to know about which stock in the energy sector should be invested in at this point. Saurabh, what's the pick?
NTPC.
Okay. Canara Bank is the next counter. Karthik from Visakhapatnam is holding 5,200 odd shares and wants to continue to hold this for the next 2 odd years. Saurabh, your view?
Hold.
Saurabh, Aegis Vopak, do you have a view?
No.
Okay. CG Power, and this is a price, okay, I'm not sure if, can we pull that up? Okay. Yeah, he's bought at levels of 8 rupees. Should he book profit? My goodness. Ajit, what's the view?
Certainly, he should book profits. It's been like almost a vertical move, so definitely he should book profits.
All right, ITC is the next counter. Raju Mazumdar is holding 42 odd shares and wants to know if he can continue to hold. Saurabh, your view?
Keep on holding.
Okay, BHEL, long-term views being sought by Jaya, who's writing in from Bengaluru. Could you enter the price enter this price? Saurabh, what's the view?
Better to enter L&T.
Okay, the next question is on KPIT. The person is holding 150 odd shares at 1426 a piece. Can he continue to hold? Ajit, on the charts?
Hold 1300 stop loss.
Okay, we're out of time on the rapid fire round, and in fact, it's the end of the program as well. Ajit as well as Saurabh, thanks so much for joining us this morning. Pleasure having you on the show as always.
Thank you.
All right, and like I said, that brings us to the end of this edition of Ask Profit. We leave you searching for the dip. Thanks so much for tuning in. This is NDTV Profit.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
Sources in ED seeking explanation on Yuvraj Singh, Harbhajan Singh, on why they are endorsing such platforms which are banned by Government of India, and the mule account and Benami transaction, the kind of promotional payout being given to some of the media houses, the ad rates are between 50 crore to 100 crore.
What happens in reality is that under the garb of skill-based game, they end up promoting gambling only.
27,000 crore is what the tax evasion, the top popular betting apps are actually evading. Between January and March alone, they have seen 1.6 billion of traction.
Imports become the exception rather than the norm, and increasingly we do almost, last year for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Imports become the exception rather than.
Hello and welcome. You're tuned in to KYC. I'm Harsh Saita. With me is Mahima Vachajani, and what we're going to do today is we're going to speak about V2 Retail. It's a value retailer and it's in focus because of the kind of stock price action that it's seen over the last year or so. The stock has more than doubled, 2.5 bagger over the last year. But look at the last 5 years. In fact, from June of 2020, and maybe that's a low base, the stock has been on an incredible run. It's up maybe nearly 40x, but to be absolutely precise, 34x since that point. So it's been a phenomenal story that's playing out in front of us, Mahima. And it's important to understand at this point, because FY26 could well be that year where rural starts to participate. We've seen rural under a bit of pressure last couple of years. Can rural start to actually participate this year, given the way monsoon is playing out? But the kind of growth base that the company has built for itself over the last couple of years is extremely high. So my first question, therefore, is can growth sustain on this kind of base? Store levels need to go up for that. Same store sales growth needs to sustain with store levels going up. And you have average selling price, which also has crept up, and that also, can it sustain above that 300 mark? will be the question, because for full year FY25, it's a shade below 300, but Q4 was above 300. So is that the new normal? Is that the new base? The second part of this is, can growth sustain without discounts? Now, discounts have come down marginally in FY25 on a very, very low base. So that's a positive, but can that sustain? Rural pickup in FY26, if that were to happen, states of UP, Bihar will well benefit from that tailwind, even a Jharkhand, even an Odisha, where V2 retail has a significant geographic footprint, and that will obviously further aid the numbers for it. Factors to consider, especially when it comes to store shutdowns, and they do this very minor tweaks in terms of store shutdowns, but that could well be one of the drags, and you'll want to understand whether that is consistent year after year. I would want to quiz them this year and then thereafter next year as well, to try and understand whether those factors are changing with regard to store competition. Challenges, store shutdowns. Challenges with regard to competition and possibly leading to poor execution. That could well be a risk for this one, because we've seen very sharp growth. They are very steady in their commentary, but any slip up with regard to execution could well hurt the stock price as well as the performance, because it's certainly not trading at cheap valuations on a trailing 12-month basis. The average selling price, the trajectory is what I would want to understand. Margin risks, both on gross as well as on the pricing front. What is the calibration that is possible, and that interplay along with competition. And last off, with regard to cash flow, can that cash flow really sustain? Because in FY25, we've seen two positive things happen. One is your inventory has come down, even though your inventory days have come down, even though your inventory in absolute terms has gone up. And second is your payables have really ballooned, and that has helped working capital days to come down, and that has aided the cash flow from operations. Can that change and reverse? Is there a risk of that, is what I would want to understand. So all of that, but first off, about V2 retail, let's take you through the journey. It's been a large turnaround of sorts, Mahima.
Absolutely. It was incorporated in 2001 and it got listed on the bourses in 2007. It was renamed as Vishal Retail in 2011 after selling the entire Vishal brand, which was loss-making, and that was one of the reasons as to why it was sold. And V2 Retail stands for value as well as variety.